Hi everyone, welcome to my Conquest monthly update session. I'm going to be reviewing R8, which went into effect August 6th, 2025. As you can see, I'm in my sample client scenario for John and Jane sample. As a reminder, the upper left corner hamburger icon, we're going to go to support and resources into the knowledge base. And as I mentioned, we're going to review what's new for release 8. Here is our table of contents. What's new? I'm going to start with the new features. I get into the feature enhancements, and then finally the assumption changes. Let's begin at the top. New features, reverse mortgage. This is a welcome addition. In the past, we had to do a workaround using a line of credit, but now we actually have this ability to model specifically a reverse mortgage. Think the CHIP home plan. Not endorsing that plan, but that is a popular solution available for people who still live in their principal residence and want the ability to borrow against the equity in their home. And they can take a lump sum payment that's tax-free, and they have options to either pay interest only or capitalize the interest, no interest payments. And so there are different programs available for that, and we can model it with a particular interest rate and payment amounts or capitalizing that interest. So let's head over to Conquest. We'll take a closer look at this because we do this in the liabilities card. So I'm going to go down here. And for liabilities, we can either include existing reverse mortgage or a future reverse mortgage. When we add it, we can go into the details and we can specify the loan date when this is going to occur, the collateral asset being used. It has to be a principal residence, has to be owned by the client or co-client within your Conquest plan. We can specify the interest rate. As I mentioned, we can either interest-only payments or we can capitalize the interest, which has the ability not to have any payments occurring by the client. It's just the interest is going to build up within the facility. Here is specifying drawdown facility. So this would be the total amount that's being borrowed or the total amount of the equity that they can draw down on. The payment frequency is related to the payment type. So if it's interest only, we can set the interest only based on the interest rate. If we capitalize the interest, there will be no payments required by the clients. And down here, we can see negative equity guarantee. Just be careful of this. It does default to saying yes. I would be inclined to turn it off and say no. This, with it turned on, will allow the liability balance to increase above and beyond higher than the value of the home. So depending on the lender, they may have this ability or not. So I might be inclined to be conservative and just turn that off to no. Otherwise, you're going to create a liability which could occur on the death or on the net estate, and it could be a liability that is higher than the value of the lifestyle asset. So something to keep in mind there to watch. We have some additional controls up here for additional payments. So in the event the client is going to make future payments towards this to pay it down, we can schedule in additional payments in the future. We can do additional withdrawals. Maybe they're not taking the full amount of the equity out in one lump sum, but they want to do a progressive drawdown over multiple years. So we can schedule that. And you can see there's room here for fees. Upfront fee could include appraisal fees, administration fees, if you want to model that as well. So we have that ability. Now, in my client scenario, for John and Jane sample, they're currently retired. So what I'm going to do is I'm going to use a SAM strategy in the planning tab to model this. That would be my preference. But as you know, you can do things more than one way in Conquest. You can build it in here as a future reverse mortgage. I just find it's less transparent. So I'd be inclined to do it in the planning tab. So let's head over to the planning tab and we can take a closer look at this. So in my scenario for the retirement paycheck, they're at 86%. Okay, so they're currently retired, and here's their life expectancy in 2050. So there's some shortfalls occurring. So what I'm going to do is try and model a reverse mortgage to start right here, to start bridging those shortfalls and get their goal hopefully to 100% or higher. So using a SAM strategy in the retirement goal, I'm going to look for that reverse mortgage strategy. So I'm going to go down here to more, and I'm going to type in reverse mortgage, take out a reverse mortgage. I'm going to apply the strategy. And then we have the controls. Similar to the liabilities card on the client overview section, we can set the collateral asset, which defaults to residence, which is great. We can set the interest rate. I'm going to assume a 6% interest rate, but it depends on the lender. I want to capitalize the interest, showing no payments are required. And let's assume there's $1 million on this facility that the client could draw down on. Add another 0. We can go into further details down here. And as I work my way down, I'm going to turn off that negative equity guarantee, as I mentioned before, just to be ultra conservative here. Don't want to run into any issues on the net estate. And withdrawals. So I can set the drawdown facility. I could do a full withdrawal. I can either choose to have it go to their cash flow or to an account. I have a joint non-reg account, so I'm going to do a drawdown on that account. So I'm going to set it to withdraw the max at $1 million. And I'm going to set the date. So notice the shortfalls were plugged in. So we did this at 5 years, but that first shortfall, I'm going to just hit done for a second, turn this off. I'm going to get this timing right. So the first shortfall is in the year 2037. Okay, so I'm going to go back here, back to my details, and I'm going to withdraw the max in 2037 to bridge those shortfalls. There we go. So I have things lining up a little bit better that way. I'm going to hit done. So now I can reference a couple of reports just to make sure things are lining up properly. We've got take out a reverse mortgage applied. So now their goal is over 100%. They're in great shape. Their need versus ability is able to be met. In fact, they've got some surpluses occurring. And I'm just going to turn this off for a second, and I'm going to show you the stacked net worth with that shortfall. Okay. If I reference my stacked net worth report, you'll notice down here is the first year of the shortfalls in the year 2037. Okay, so that was the same over here in 2037, right there. Okay, so I'm using the stacked net worth report. When we have shortfalls in retirement, it creates a liability. It's not an actual physical liability like a loan or line of credit. It's just showing the cumulative deficits over time that are increasing. Okay, so that's the situation right now. I'm going to turn this back on. And what we're going to see is now the liability is replaced with the reverse mortgage. So we have the $1 million plus capitalized interest. And that $1 million is going to go into a non-reg account as I directed it down here. Okay. And now it's used to support the retirement paycheck. So there's an example of a great planning strategy that we can now implement actually into our software, into our scenario, to make a recommendation and give a client a sense of how this all works. Okay, so it's a great planning strategy we can now use. I'm just going to show you really quickly. Another report is the single liability activity. And I can pull up that report. And I can go to that future reverse mortgage, and there it is, the withdrawal for $1 million in 2037. So I can just audit this and make sure the cash flows are lining up properly, and it's doing what I'm telling it to do. I think another report you can reference might be the multi-year estate. So let's take a look at that one. And on this report, we can reference the liabilities. There it is, 2037 and then into 2038. So we can track that on the net estate as well. Okay. Obviously, that would reduce the future net estate of the client because of that liability. And we can reference our legacy goal up here. Okay, for that. There you go, depending on the scenario. All right. So that covers reverse mortgages. I like it. Feel free to use it. Let's move on to the next item. I'm going to go back to my notes here and scroll down to the next section, which is capital loss carry forwards. This is great. So if clients have capital losses in the past, they can carry forward them indefinitely into the future. Okay, so now we can model that in Conquest. Let's head over to the software and take a look at the controls for that. If I just back out to my client overview section, we can go to the starting tax values card. And if you slide all the way to the bottom here, you can see the controls for capital loss carryforwards. In this example, I put $100,000 as capital loss carryforward. So that is the net amount, the net capital loss carryforward. And so let's model an income scenario where John has some capital gains. Let's say he has 50,000 and it's starting this year. I'm going to just go Jan 1, 2025, and it's just going to be for a few years. So I'll put January 1st, 2027. Okay, just for a couple of years, 2 or 3 years. It's an annual income, and I just want to make sure the frequency is set annually. Okay, so we're good there. So we have some additional capital gains income. Okay, that's going to be taxable to him, but he's got capital loss carryforwards, which will help offset this capital gains, just to show you how this works. If we head up to our audit reports up here, and I can reference a few reports. I'm going to show, first of all, cash flow. And I'm going to go to 2025. And we should see the $50,000 capital gains flowing in, okay? Now, there's another report we can reference, which is net capital loss, multi-year income tax summary. I'm going to head over to my income tax section. Just referencing, this is the income tax summary, and we can see the 25,000. So this is the capital gain was 50,000, half of which is taxable, so 25,000. And then we have down here net capital losses of other years, the 25,000 being used to offset this. Okay, and I had it over multiple years. So we can go up here, John, and we should be able to see the capital gains. Capital gains income, where is it? 2025. Oh, I'm not seeing it here. Oh, there it is, 25 offsetting, capital gains. Yeah, it's the offsetting, so it's not showing up as a taxable capital gain anymore. So that's one way we can double check and cross-reference our reports to make sure that works out. So this would be a very unique scenario where clients have capital loss carryforwards. Maybe they've, I don't know, sold a business or sold something that was significant, created a capital loss, so they could carry that back the previous 3 years or forwards indefinitely. So a couple planning opportunities to consider there in a very specific scenario. Let's head back to our notes section. I'm going to move down to the next section. And so we're getting into feature enhancements. This is the needs breakdown audit report improved for retired clients. So what they've done is they've added a few more details in the cash flow widget, as you can see down here. For clients that are retired, we now have access to see a breakdown of all their pension income sources, CPP, OAS, registered, TFSA, non-reg, and other. Okay, so let's head into our scenario and I'll show you what that looks like back here. This can be used or pulled up in the planning tab. And so if I add a tab and I add in the needs breakdown for cash flow, there it is. So specific to this scenario for John and Jane's sample, here's their pension income, CPP, OAS, and other. Okay. Now this is specific to clients who are already retired. Okay, we get this additional info. In the past, we didn't have this detail or this level of detail for retired people, and now we do. But this cash flow widget or needs breakdown with a paycheck was always available before, but it's just specifically for retired clients. It didn't have this breakdown with the pension income sources. So that's a nice new feature, I would say. Let's head back to our notes and we can move on to the next section, prepare reports page. Okay, I'm using the Canada Life version of Conquest. Unfortunately, this is not applicable to our version. If you do use another version, you would have access to this. And basically what you're able to do is retitle the name of the report on the cover page, okay? Canada Life version defaults to your financial story. And so that is our only option. So unfortunately, I can't demo this in my software this morning. Moving on to client search functionality. So this added some enhancements to the client search feature. So if you're in the home page of Conquest and you're searching for clients as you've been pulled in, you just put their first, last name, and apparently you're able to make faster searches. I'm not going to show you those details there for privacy reasons. I've got some clients in there, but it's kind of nice to know that it shouldn't be too difficult to find your clients when you have multiple plans. I think over time, as you do more and more Conquest plans, maybe you have 100 clients in there or 100 more client plans. You just want to be able to find it as quickly as possible. So that would be a welcome addition. Let's move on to plan alternative client report footer removal. So now we have the ability in the client PDF report to add not only the current scenario, but also plan alternative scenarios, which is nice. When you added the plan alternative reports, it had a footer at the bottom. Apparently it was confusing to a few clients, and so they decided to remove the footer. So that's the update there. I'm not going to show you that detail, but it is there, and hopefully you should be fine with that. Let's move on to voluntary income tax deductions or withholding taxes. So this is specific to other taxable income. Voluntary withholding tax. So other taxable income type can now be specified on other taxable income types. The voluntary income tax deduction helps in modeling situations where more taxes are withheld at source to avoid a larger tax bill and/or installment taxes. So what does this all mean? Let's head over to Conquest. We'll take a look at it. I'll just back out to the client overview section. In the income section, we can now add other taxable. Actually, I was added that in preparation for my recording, but I'll just step back and I'll add it in again. We can call it other taxable. And let's say John just has that 20,000 of annual income that's flowing in now. And I'll end it January 1st, 2027. And if you go into more detailed data, the feature is down here, voluntary income tax deductions on this other taxable income. We didn't have this field before, so if you left it blank, when there's significant additional income like other taxable income or rental income, think self-employment income, the software would put the client on installment taxes, if it was significant enough. And so this feature, adding the voluntary income tax deductions, would smoothen out those tax liabilities and thus could create a situation where installment taxes won't kick in. Something to keep your eye on for sure, but it's nice to have additional controls there. Voluntary income tax deductions in all the tabs and toggles, they always default to 0, right? So when you think in terms of pensions, okay, and you go into each of these, voluntary income tax deduction, when you think in terms of the accounts, RSPs, okay, into the settings, you have voluntary income tax deduction. It always defaults to 0. So if you want to add that additional level of detail, be a little more granular in your planning, these are the fields you can include a 20 or 30% withholding taxes applied, and it can help smoothing out some of those taxes. Create a situation where there's not that huge looming tax liability for the following year in April. So kind of nice there. Let's head back to our notes and we'll move on to the next section, which is EPSP percentage amount of salary savings. Okay, this is employee profit sharing plans, and we are now able in the savings component to do a payroll deduction. This gives you additional control. Let's head over to Conquest, and in the accounts card, I might have added it in already. No, I don't have it there. So I'll hit plus account. Let's say John has an EPSP. It can be found under other accounts right here. Okay. When I add it in, I can go into the more detailed data, to the savings, and the feature that was added. Before we only had recurring or one time. Now we have payroll deduction, and employer contribution. So specifically to payroll deduction, you can use percentage or an amount. So if you choose amount, it's per pay period versus percentage of salary. Keep in mind, if you choose the amount per pay period, just be mindful in the incomes, the frequency of the income, okay? If I were to add John a salary, the default is a monthly, okay? So most people do get paid bi-weekly if they're employed with a salary. So just something to keep in mind, your eye on, and be mindful of when entering any saving strategies, group RSPs or defined contribution plans, and now EPSPs. So something to be aware of. Let's head down to pension income splitting. So now a new elect to split pension eligible pension income toggle has been added to the client data. Tax assumptions allowing you to enable or disable pension income splitting within a plan. Let's head over to Conquest. We'll take a look. So under plan settings, plan assumptions, here it is. Nope, it's starting tax values. Oh my gosh. Where did it go? Here it is. Elect to split eligible pension income under tax assumptions. So the default, it's turned on to yes. I recommend you leave it on to yes, especially for joint plans, husband and wife scenarios. Most times they can split eligible pension income. So it would create opportunities for income splitting, obviously, and to reduce the overall taxes between a husband and wife scenario or between spouses. Okay, where this addition came in is relating to the accounts. So eligible pension income, let's head over there. So if we go into the accounts and we go to an RSP and we go into the settings, there it is. There's the control added, the feature for eligible pension income. This is an RSP, so RSP would be converted to a RIF, and at age 65, RIF income is considered eligible pension income and could be splittable, okay? It has to be a RIF, and it has to be the annuitant age 65 or older, okay? Something to keep in mind. Now, the feature added here in the accounts card, as they suggest here, could be because maybe you're using or trying to model an IRA, investment retirement account, a US type of investment account modeled as an RSP. It just gives you that additional control there with that toggle. So that was the impetus behind that. But now, yes, we do have additional controls to something to keep your eye on. I think that, again, is a very unique scenario and may not be always applicable, so something to keep an eye on, depending on your client scenario. Let's move down. Finally, we are here to assumption changes. This is relating to budget 2024 toggle changes, and it's been added within the plan assumptions card. So let's head over to Conquest. We'll take a quick look at that. I'll close this, plan assumptions right here. They've just reworded this a little bit differently. Apply proposed lifetime capital gains exemption limit. And so this would respect budget 2024 proposed increase of the capital gains exemption to 1.25 million. So that's going to occur with it turned on. Any transactions occurred after June 25th, 2024 will have the new proposed LCGE limit. And so from a tax perspective, everything will be automatically calculated for you that way within Conquest. So that covers R8, August 2025. Hope you found this session useful. If you have any follow-up questions, please put a comment down below. Otherwise, send me an email, paul@paulbethel.ca, and I'm more than happy to answer any additional questions or help you get into any further case consultation requests. Enjoy your day.